How do monthly asset allocation systems perform during election years? This is Bill Scheid from Applied Finance Research, and that's the question that we're going to explore in this video. For this exploration, we're going to focus on one of our most popular monthly systems. This is one of our momentum systems called BMR21. What we're looking at here are the backtest results for all years from 2002 to 2024. On the equity curve, the green line is the system performance and the blue line is the S&P 500. If you're already familiar with this system, you know that the results are pretty impressive. Total return of 2,211% versus 764 for the S&P 500. The system has a back-tested CAGR of 15.9% versus 10.7% for the S&P. And this is before we add our volatility stop and short positions, which further increase the return of the system while also reducing the drawdown. To dive in a bit further, here we have the annual performance for each year of the backtest. The first two columns are the total return for the system, and then the S&P 500. The third column is how much the system over or underperformed for the given year. And the last two columns show the maximum drawdown for the system and for the S&P 500. Now, to help us answer the question about election year performance, what we're going to do next is isolate the election years that we see in these data. So here we've got the same columns, but now we're showing only election years. Now, one of the first things that I notice in these data is that of the 6 years shown here, we only have one losing year. That was the financial crisis of 2008. The system returned minus 8.3%, while the S&P lost minus 36.8%. The S&P had a maximum drawdown of minus 47.6%, ouch. And the system only had a maximum drawdown of minus 23.7%. So yes, it was a losing year, but the system outperformed the S&P by quite a bit. And speaking of outperformance, another thing I notice here, 2020 was another standout year. A total return of 87.6% versus 18.4% for the S&P. I also notice that 4 out of 6 years, the system outperforms the S&P in terms of total return. And 3 out of 6 years, the system has a smaller maximum drawdown than the S&P. Now, let's take a look at the bottom row. Here we have the average for each column. So the average annual return for election years for BMR21 is 18.4%, while the S&P's average return is 4.7%. So that means that the system beats the S&P by 13.7% in terms of total return or average total return for election years. The system also beats the S&P in terms of drawdown. You'll notice that the system had an average maximum drawdown of 16.8% versus minus 19% for the S&P. Now, keep in mind that all of this is without the volatility stop and optional short positions, which further enhance the performance of the system. And as for this year, 2024, of course, we're not all the way through the year yet, but so far the system is beating the S&P both in terms of return and drawdown. And we may have room for more return this year. So far, the system is up 9%, but the average return for election years is 18.4%. So could there be another 9% left in 2024? It's possible. We'll have to wait and see. In the meantime, this is Bill Scheid from Applied Finance Research. Thanks for watching and happy investing.